Hello and welcome to Landy's Crypto Corner. Today is November 4th, 2024, and we're looking at Bitcoin as we usually do every Monday, Wednesday, and Friday. And, tomorrow's election day. Bitcoin has already closed the Monday candle and is on election day already. It's already started its Tuesday candle here. Now, one of the big things that I am going to do today is I'm going to start out with the daily and 12-hour. And then we'll move up to the weekly and kind of wrap up our thoughts maybe by looking at the monthly. But, Bitcoin hit our upside targets from last week, coming into Tuesday. And we saw a nice, move to the highs, which we were expecting on any, even lower term time frame closes above our run the highs zone above here, which is around that 70,000 to 70,200. Kind of already closed it. It closed like right on this rejection right here. Next day opened up and right on through to our upside targets there. Now, this pullback is fine right now as it stands, but we do have to take into account what is happening on Tuesday and during this daily candle that is open right now. And for that, I want to pay attention to the daily and the 12-hour and kind of give you my take on what I'm seeing. And in this case, we've gotten the expected move down based on the criteria I laid out on Friday, right? We saw the weekend testing further down on Sunday. Monday got that continuation down, but got bought back up above Sunday's low. And it dipped right into our pivot zone, which is what we were looking for, to the downside. And if we do see this 67,272, which again, for those that might be new, this is the first lower high of a downtrend here. And this was an area that was retested and rejected on the way back up after putting in some higher low structure. It was an area of support around 65.5 to the 67,272. We saw the second major downtrend's first lower high is kind of where Bitcoin was trying to maintain itself over the weekend, and it did not coming into Monday. We saw that area act as, resistance prior, but once it dumped out after that first lower high of the second downtrend, where to try to hold itself, 67,272, big rejection there, and then down, down, down. So again, we see this area 65.5 and 67,272 again acting as shorter term resistance on the dailies here. A move up to test this first lower high of the second downtrend, and we kind of have our pivot zone defined between this first major lower high of the first big downtrend here to the second lower high before the trend reversal. And in this case, for those that are wondering, yes, there's lower highs above, and the above here, the bull run begins. But this was in the context of an uptrend. So we took the first major lower high of the first major downtrend, has been acting as a bit of a pivot between that and the second major lower high there. And of course, that was the 65.5. The close didn't come in there. The wick did. It was basically a test of that $65,000 high from 2021. And testing down into this area locally, which area would I put the most importance on? Well, it's going to be $65,000. That's where roughly around where this low is coming in. So Bitcoin still has some room to kind of go and test into that pivot zone. Doesn't mean it has to, but it has room to do so. And in terms of structure, I did want to point out structure on the daily as we do, go by trend, support and resistance, volatility and momentum here. We had, the little bit of a trend reversal set up here, higher low, higher high, and then a breakdown. So not completing that trend reversal, a breakdown to lower lows, and then a lower high. So that could have been a trend reversal setup from here once this lower high was set in, but it turned around and put in a higher low, broke that lower high, and put in a higher high. So we had a trend reversal setup back to the upside. And then, of course, it came down to make a higher low, lower high, lower low, and then break that, which was also another trend reversal setup, to then come in and put in a higher high, higher low structure. We have a higher high. So we have three parts of a trend here. In this case, we have the trend reversal, and then we're just awaiting, we got the higher high, and we're awaiting a possible higher low structure here. So what does that mean? That means for Bitcoin on the daily, we want to see closes coming in above around 66,550, and especially above 65.5 and $65,000. So, but for closes, we do want to see closes preferably above 66,550, 560 or so, and that would look good. I would also like to see swings stay above the 65 to 65.5 here by the pivot zone, but we don't always get what we want. And in this case, structure would be preserved if we do see closes maintaining above 66,550 and swings staying above, that 65 to 65.5. I would be looking for a higher low to be set, and of course to work our way back to the upside here for Bitcoin. And again, I would be looking roughly 68 to 70. This is 68.3 to 70,200 or so. Above there, 70 to 72, and then the above here, the bull run begins, kind of thing. Again, to go retest the higher high of this particular move and the actual all-time high. Again, I've been looking at this as a zone above or in and around the all-time high zone and above as 73 to 75, 75 to 78, 78 to 80 in the mid to low 80s from there, kind of taking the daily, the weekly, and the monthly into account for volatility in blue sky territory. So meaning that being above rather the all-time high there. If Bitcoin were to break down below around 65,150, especially on a close, or $65,000 if you like, I would entertain moves back to, roughly around 64 to 64.5 here by the top side of the recovery zone at 63.8. Anywhere below there, keep an eye on this high right here at 62,800 or so, where this close open came in and this order block candle came in. Anywhere below there, I'm looking for 60K and under. Bulls, you don't want to see closes below this wick low right here. This wick low's headed into a major area that is the prior cycle's quarterly closing all-time high right around 58.8 to $59,000 depending on your chart. We start seeing closes below there, not good. We're probably running down for lower prices, into the 58 to 58.4 level. Obviously, it could find an area to swing there, but if it starts closing below there, losing that daily level, I'm looking, back down, 57.5 and under, down to 55,850 again, possibly bringing these lows on a close under there at that $54,000 area and under. Back into play. I wouldn't want to see that, especially on weekly closes. I'll tell you that below 62.8, again, you don't want to see closes below there. That would open if the daily wasn't already running, down to that big quarterly level. I would be looking for it to run down shortly thereafter. Now, this is not a crazy setup. This is a pretty bullish setup. I get that a lot of people are pretty bearish. There's a lot of conflicting news occurring surrounding the election here. I'm going to tell you again, and we'll get into this in a little bit here. I don't think it matters who wins. The markets will still go on a run. We have not seen the bull run yet, but we have seen a bull market, and we're still in a bull market, as I've mentioned, after the October monthly close. We did set a higher low in the monthly at $49,000 on a swing and $59,000 in a close. So that's one of the reasons why I say bulls, you don't want to see closes back below here, because that is the closing higher low on the monthly there, right around that $58,000 to $59,000 level. So as well as its historical significance for being a quarterly closing all-time high, right? And again, that's a closing all-time high from the prior cycle where we did see the $69,000 all-time high. So we talked a little bit about trend here. I have to look for another higher low here. I won't be looking for another higher low if we start seeing closes back below 66,550, because it wouldn't technically be a closing higher low. Could still get wick higher lows, but I would be looking for these wicks to get ran around 65 to 65.5. So don't want to see closes like that for the bulls right now. It would not be a sign of strength, at least in the near term. And we would be looking for lower prices. So, there's our trend and support and resistance kind of all in one. Let's turn on our metric for volatility here. And you can see how important this is when looking at Bollinger Bands, which is how I like to measure volatility levels of interest. And lower second and upper second typically act as reversal areas for price, but closes above the upper second would initiate expansion to the upside. You do need to see additional criteria like closing above the close open high here and then the actual high to get that continuation. But we would be looking at an uptick in volatility to a more aggressive, in a more aggressive fashion, I should say, above an upper second. Or we look at these areas as potential reversal areas. I did want to note to the upside here, above that 70,000 to 70,200 is the upper first. If we did start to see closes that did not yet run the highs here between 70 and 72, obviously this would be 70,200. So on the upper end of that towards 72 and above, I would be looking for it to at least get tested shortly thereafter. Obviously, we see the basis band right in the overhead zone here between around 68 to 68.3. This is coming in above there at 68,640 or so. We do need to see closes back above that. And if we did start to see, for instance, a Tuesday candle close back above that, we need to see this high taken out from Monday here at that 69,450 level. That would set the low. And then we would be looking for that upper first right around that 70,000, 70,200 and above as possible targets if it didn't already get hit all in one shot. And you can see below yesterday's low at 66,783 or 66,800 basically, we have the lower first right in the pivot zone. So if we start to see essentially around $67,000 lost, watch this area, upper $66,000 area. If that is lost, then we're looking at, guess what? The bottom side of the pivot zone around 65 to 65 and a half. Any closes below the lower second would be losing 65 and a half, and we would be looking at that $65,000 level as the next logical area to watch. Any closes below there, we're looking for expansion. Guess what? Down to where the lower third is currently, and maybe more, where that's currently coming in around that 63,800 top side of the recovery zone. And that is what I'm going to be watching there in terms of trend, support and resistance, and volatility. Now, understand that when I talk about Bollinger Bands, upper second is typically a reversal zone, or you close above it, you're looking for expansive price action to the next area of interest. And then if it breaks that area, you're looking for it to run further. Same for the downside, close below the lower second. We're looking for the next big area of interest. Obviously, the lower second's below this high. So there is areas in which, in this kind of no man's land between the recover and pivot zones, there is some areas that price could catch some nice bids. But realistically, we're looking for expansion down, right? Continuation would be breaking below that 63.8 into the zone there, which I just talked a little bit about. Let's go ahead and take a look at momentum on the daily, as that is the fourth key pillar. So we got trend, support and resistance, volatility and momentum. And we can see that this is a regular Stoch, not a Stoch RSI. This is a fancy one. You don't need one like this. There's plenty of Stochs, regular Stochs available in the indicators tab here that you can find for free that have pivots. Just look for a Stoch or reverse Stoch with pivots. The pivot number for momentum is going to be $71,000. So again, that would put things actually substantially back above the upper first, and we would get a key piece of information before that pivot would even be, met or get the Stoch fully turned, is we would have a higher low in if it did that, let's say in today's candle or Wednesday's candle, without moving towards this low and violating this prior low. And in this case, there is the potential there. There is a bit of a meme trend line here. You can actually utilize trend lines on this particular momentum indicator here. We kind of have a meme trend line, which does imply that if we see the momentum indicator continuing down, and price not kind of pivoting, we're probably looking at some further downside tests, if not breaks. That's not 100% for sure, but it is one piece of confluent information, right? You don't just take this breaking down as like, oh, it's all over. But just understand that that you can play momentum trend lines, and you can play divergences on a regular Stoch because it is referencing close over close price momentum. It is not RSI. Stoch RSI measures the velocity of RSI. So in this case, we can use some meme trend lines and stuff. Don't expect them to hit, and like just take them as a piece of confluent information. All right, so that's the daily. Here's what I'm watching on the lower term time frame, like the 12-hour. We spent quite a bit of time on the daily, but I did want to call out this 12-hour. So you see how Bitcoin did close below the 20 simple here. This is the basis band, closed below it, went to the lower first, and got a nice little bounce off of it on the daily in terms of a volatility level of interest, rather. On the 12-hour, you see that Bitcoin is getting gotten a nice close open thus far, right on the lower first. If it starts to break down, it already hit the support down here, but if it starts to break down below there, we're looking for it to run the support there at 67 to 67, 2 to 300 or so, and then below there, that 66, 800 and under, possibly down to that lower second, which is just above $66,000 at 66,140 or so. That, I wouldn't want to see closes down there. On the 12-hour, if we did start to see closes down there on the 12-hour, be aware that price has the possibility to move lower, especially if it starts to get any lower than the lower second, and anywhere below basically 66. We're probably already seeing 65.5 and under being run. Don't want to see any closes down there that would violate structure. So we essentially have an uptrending structure to a trend break and possible trend reversal set up off the lower high that got a nice higher low on the 12-hour, just like the daily. So we have higher high. We need to pay attention to possible higher lows right around this area of support as well for the bulls and bearish. So if you're bearish and you're in a short position, many probably already took some profits, but make sure that you understand that this is the logical place to start looking for a higher low. If it does not come, then we're looking for, price starts trading down back below Monday's low and kind of go from there. The other thing that I'm looking for here is, there's no real big in-trend bearish divergence. We saw most of those play out from this structure on the way up. Nice higher low and then higher high. So I would need to see another bearish divergence. We don't have that right now. So this is just a pullback as it stands. Pullbacks can turn into crashes. Just understand that as well, bulls. So keep your eyes peeled. 69,300 is the number to beat to the upside to turn Stoch momentum back up here on the 12-hour. So essentially, it's the same kind of criteria. It's a little less aggressive on the 12-hour, 69,210. Would turn, or would put in a low, but preferably I'd want to see the same area that I just called out on the daily, this high right here at 69.5, close back above. Of course, that is this high over here. And for the daily, understand that this high is confluent with this high over here, which was a closing high as well as a swing high. So that area being rejected on Monday, not great for the bulls, but if it is regained, that would set a low on the 12-hour. That would also set a low on the daily, especially coming into close, if it can maintain it. So that's my take on, the daily and 12-hour. And I think it's relevant just understanding kind of where things are in terms of the setups as we move into election day. And then, of course, FOMC meetings and rate decisions later this week, Wednesday into Thursday. So keep all of that in mind. Let's go ahead and get rid of this accumulation distribution chart, and let's talk about the weekly. All right, the weekly setup, pretty clear. I think that this setup is bearish, and it does favor the bears, but that doesn't mean it's going to end this way. It doesn't mean it's going to end in a bearish manner. So we had a bear hammer followed by an inverted bull hammer, and then Bitcoin's just kind of hanging about above that upper first standard deviation at around 67,300 or so. And in this case, what would set the high on the weekly? Technically speaking, you would see high set on any closes below the low of the end of October candle here. And that is at 67,444. Basically anywhere below 67,450, we would start to see, this being painted as a technical closing high. But realistically, I would need to see the $65,000 or 65,150 here on spot price close below to really set this in. Start looking back to, guess what? 62,800 on a close. This is the last higher low close on the weekly. So definitely something to pay attention to. Again, below $65,000, you really do need to pay attention to this, bulls, because anywhere below the basis, well, that opens up this low again, which is right around, our key area for that quarterly. Let's go ahead and throw that on there just so you can kind of see it. This is not the one that I wanted. Let's go to this one. It's a little bit clearer there. We're starting to look back to this quarterly area from March of 2021, the monthly and quarterly close. So this is an area that you don't want to see the bulls, giving up again, because that would indicate that the low side structure is going to get ran. We see that we have a wide breadth between, the basis and lower first right now in the weekly, and the lower first all the way down to the lower second there, 53.5 or so, kind of encompassing the $54,000 lows. And, then there's still supports down there, but that would not look good structurally from the weekly, as the weekly is currently in, and you can see right where Bitcoin is having trouble at $69,000 prior cycle high. Not unexpected at all. And the big thing is we have, higher high, higher low structure. So higher high on a swing, higher low on a swing, higher high on a swing. But we also have higher high close, higher low close, very close to each other. So this is going to be the key, the key zone, between 65, essentially 600 on a close, 500 on the daily, and that 62,800. Lose that, probably run on the lows, maybe even lower. And of course, this trend reversal setup on the weekly would be broken, and we would have to evaluate whether it's a deviation or something else going on, if and when that did occur. Otherwise, living above the upper first on the weekly is good. And of course, again, that's around that 67,300 on a close. Wicks can land anywhere really, but it's about closes for volatility and of course for structure. In this case, closes above 67,300 by the end of the week, going to look good. And still keep, from a volatility perspective, the high side structures in play here. Obviously, $69,000 on the closes up here, to the upper second. Obviously, we can't. We'd be remiss if we didn't call out $70,000. As 70,000 to 70,000, 72,000 are key areas, and that's right where the upper second is. Above there would put it above the closing all-time high structure on the weekly. We'd be looking for the current high side structures to be ran. And of course, I'd still be looking 73 to 75, 75 to 78, which would be just above. And if price were to rise, we're going to see the upper second and upper third start to move up intra-week. And I'd put this around $77,000 to almost $78,000 if Bitcoin did start to move this week to the upside through the bands. They do like to get stretchy when they are pushed. Not too much, but they do start to get a little stretchy up there. And then, of course, let's keep in context what is going on the monthly here. And we'll flip back to the weekly and talk about momentum and pivots and stuff like that. But we do need to talk about the monthly again. Just to remind you, prior higher low in the monthly was here at just under $25,000 at 24,900. That, guess what? October candle did the bulls well here and breaking out above that 31.8 level, which was the close open of the breakdown candle to really get that bear market rolling into its lows. That, of course, then kicked off the move to the upside here. We even had an ETF launch in January right here. And now we have higher low structure on the monthly solidified with the close of our October candle. Hey, what do you know? We had a September into October candle. This was a much more powerful candle in October of 2023. November move up to the top side here of the compression of the bands, and then December into January, kicking off that expansive move to the upside. Here we have a higher low. Pay attention to $49,000. That is where the monthly basis band is now. Don't want to lose that, don't want to lose that on a close. Wicks can really land anywhere. It doesn't matter. But the October candle moving into November here did close closed and solidified this swing low as a swing higher low structure, and closed the higher low candles on a closing basis. So looks fine to me. There's nothing to be alarmed about just right now. To the upside, of course, trading and closing candles above 65,600 or so, where the upper first is. Hey, didn't we just call that out on the weekly? Yes, we did. We called that out on the weekly. 65,600 is going to be right around the highs here. And that is something that we do need to pay close attention to. So this is this high side structure. This was the higher high that broke this downtrend. So 65,600 is right there. Or yes, wait, 65,600. Sorry, that's the close open. Sorry, not the high. The close open high here is 65,600 exactly right there. And the monthly is, whoops, we can get rid of that. We'll just use one arrow to point this out. The monthly upper first is right there. We want to see the monthly closing above there. That would look good for the bulls to keep the volatility range to the upside in play. To the upper second, which is in the low $80,000 region, coming in at 82.5 right now with this pullback to start this weekly candle and the beginning of the month here. So, you know, above 75, I'm looking for dailies around 75 to 78, 78 to 80, mid to low 80s. Mid to low 80s is, you know, where the upper second is. Now, closes above there would kick off expansion to the upside in a more aggressive manner on the monthly. And as I've noted before, I would start to look for, you know, $100,000 region by the upper third to be fair game. And typically when Bitcoin is actually ready to go on the run, we see price trending outside of the upper bands, both the upper second and third in this case. And we are back in a compressive or lower volatility environment because of this sideways and down price action. And, you know, I would, you know, be looking at above $100,000. This would be, I'll be honest with you. Okay, this is where we're going to get into a little bit of politics. Crypto unfriendly administration, shallow highs probably coming around the upper second to upper third. So anywhere in the mid to low 80s to $100,000. A crypto-friendly administration likely sees Bitcoin getting expansion above the upper second and third and going on a run, which would imply much deeper price targets than that $100,000 area. Now, it doesn't have to go rip into the upside. One confluent area that we've talked about from the prior cycle that might be more relevant to what we are seeing now, might not be, but we are just looking at history here. The 1618 being a key area if you're more on the less volatile side of things and volatility decreasing over time, especially through this cycle. I'd argue with you about some of the longer term cycles. I think it's just a sideways and up compression that's going to break out in a very violent manner at some point. But if you're going to be more conservative, you might take the 1414 instead of the 1618 on this. We have, by the way, confluent levels. This is right around the upper second. Would probably move to the deeper, you know, mid to low 80s, and then we start looking, you know, $85 to $90,000 essentially by this 1.1618, not 1.618, 1.1618, or 1.168 rather. But the 1272 to the 1414. You see we've got above the upper third if we're going to do this again, like we've done every cycle and just about every bull market breakout with blue skies, even in traditional markets, trend outside of the upper second and third. In this case, you know, above $100,000, which is the 1272 off the bear market pull on the fib extension here, you've got the 1414 at around 128. So fair game. And then up to that 1.618, which is essentially kind of mirroring that same pull from this bear market to where this top came in. And that's about $173,000. You know, I do think that in a crypto unfriendly administration, we likely see a shallow top that maintains inside of the bands here for the monthly and just goes back into a long form consolidation, to be quite honest. It could be completely wrong about that, even with a crypto unfriendly administration. Either way, I do think that Bitcoin will break out into blue skies relative to its all-time highs, but it might just be shallower and shorter lived. I don't know. But that is something that I am looking out for if it is a crypto unfriendly administration. If it is a crypto friendly administration, I'm looking the other way. I'm looking for things to, hit that upper second, hit that upper third, start closing above it, and go on a nice run. We'll see if I'm right. I also think we're not going to find out very soon. I don't think things are going to wrap up on Tuesday. I'm already seeing it in my local jurisdictions and local municipalities that things are probably going to drag out even where I am in California. Not just for the national general, but for local. It's just, yeah, it's a whole thing here in the United States. If you're not from here, it's a mess. But we're also hearing that there's like even our counterpart, if you were to think on the other side of the country, New York, to the New York to California connection when it comes to crazy shit. Long live Peanut, anyway, and Fred. But in this case, they've got until the 12th to even get their ballots in. So it's just, I don't think we're going to see this thing resolved tomorrow. So I do think it's a long week ahead for those that are speculating based on election-based news, which might lead to higher volatility and lower term timeframes as different kind of news makes its way out there. So just be aware of what we talked about earlier in the video with some of the lower term timeframe stuff. All right. I'm going to talk to you again on Wednesday. We will follow up and see where things kind of land. We'll maybe have a little bit better picture of what's going on here in the United States regarding the election and a crypto unfriendly versus crypto friendly administration. And that's all I can hope for. And what I do encourage you to do is, if you're here in the United States, get out tomorrow and vote. Doesn't matter who you vote for. Exercise your right to vote, please. And I will catch up with you on Wednesday. We'll revisit all of this stuff that we just talked about. We'll take a look at possibly some other things that might come into play regarding DXY. I'm still keeping a very close eye on it. I'll give you a little preview of it real quick here before I go. We'll go to currencies and bonds. We'll go to Dixie. And we'll see that Dixie's following some LARP lines that I had drawn out for the chop and charts with Mainzy and Benny. And I don't know if it's going to play out this way. This was just me speculating. It did happen to just top out right where my arrow was, which was a area of resistance. But, this is looking interesting. And if the dollar's going to keep falling, we have some things to talk about on Wednesday as we head into a possible rate decision from the Fed. So, yeah, you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Go vote. Take care.